Good afternoon, everyone. Lovely to see you all here, and so many of you. My name is Crona Clohessy. I'm the policy lead in the Institute, and I'm delighted to welcome Shankar Singham and Shanali Jasani here from the Trader Support Service Consortium. I know we've had a number of these events over the last few months, and I know there's been several updates and enhanced functionality in the Trader Support Service. So both Shanali and Shankar are going to take us through that today. We do have time for questions and answers at the end. So at any time during the presentation, please feel free to populate the Q&A function at the bottom of your screen with any questions, and we'll try to get to as many as possible. The session is being recorded today, and that recording will be made available to attendees after the event, as will a copy of the slides. They'll also be circulated. So I hope you enjoyed this afternoon's event. We are scheduled to finish at 2 p.m. and we look forward to hearing your questions. So I'm going to hand you over to Shanali now. Thank you.
Great, thanks, Crona. Hi, everyone. As we said, you have myself and Shankar Singham here to take you through this presentation. Essentially, it's just kind of a refresh on how the process works, what your declarations look like, and the majority of the presentation, which will be done by Shankar, will be focused on, what are your options in terms of declaring? If you are looking at supplementary declarations, do you know what your tariff options are? Have you heard of the UK Trader Scheme? Do you know how to navigate your rules of origin? Have you heard of the new tools that the TSS has released to help you declare and ultimately show you what some of the decision engines look like and what's coming up? So that's essentially what we're going to take you through today. And as I said, we'll share the slides with you, so please don't worry if you do want to take any notes, or there are lots and lots of links that you can use afterwards. So just a quick reminder of what the TSS is. As I'm sure you know, the TSS is a free-to-use digital service helping all traders moving goods between Great Britain and Northern Ireland complete declarations. We went live on December last year, ready for when the Northern Ireland Protocol came into effect on the 1st of January this year. As I'm sure you know, we are contracted by HMRC, and ultimately, we are on a temporary contract to help kind of with the immediate sort of new processes and all the administration that comes with that. And we will eventually exit the market. So just something to be aware of. So what do we actually do? So a huge amount of our focus is on education and guidance. The TSS really wants to ensure that all traders feel supported in understanding what are the new requirements, why have they happened? What does the Northern Ireland Protocol actually mean to me and my business? What do the declarations mean? And sort of just ensuring that, from the smallest to the largest traders, they really understand what are the requirements in the end-to-end journey. And that includes, for traders moving sort of animal products, any SPS goods, so things that fall under DEFRA guidance, what is it they need to do to clear the ports, as I said, in that end-to-end journey. So we've stood up a education partner site called NICTA, or the NI Customs and Trade Academy.co.uk. You'll see lots and lots of links throughout our guidance, throughout the presentation. So please do visit it if you haven't already. That's NICTA, or the NI Customs and Trade Academy.co.uk. We've published a huge amount of material on there. These range from webinars, recordings of webinars we've done. There are video demonstrations of the portal, step-by-step user guides, really, really detailed data guides, really kind of everything you need to walk you through each type of declaration and all of the various functionality that TSS supports. So yeah, please do visit if you haven't already. Obviously, the entire point of the actual TSS system is to essentially provide a digital way for you to declare your customs import declarations. As I said, we run fully digital, kind of moved completely away from paper systems. There's no need to print documents. There's no need to fill in any sort of like handwritten forms. Everything is done via our portal, which is the Trader Support Service.co.uk. Hopefully the majority of people on this call are already TSS users, but if you haven't already, please do go register, take a look at all the guidance that's on the portal, take a look at NICTA. So as I said, we run 24 hours a day, 7 days a week. So you can be submitting declarations at any point within your sort of supply chain. They don't need to be within typical working hours. Because everything is automated, we talk to all the government systems. You don't need to worry about, things, as I said, things running 9 to 5. You can be submitting at any time of the day. But if at any point you do feel like you need a more human sort of touch, we've stood up a huge contact centre of a couple hundred agents who are there to really provide that sort of extra human level of service. So if you were to call the contact centre, you'd be put through to our tier ones. who essentially act like call center staff, helping you with all your inbound queries. They then move you up to our tier 2s, who have a couple of years of customs experience, and they're really there to help with that sort of case management aspect. Can point you towards the right guidance with the right teams. And then you have our tier 3s, and these are a set of around 60 agents who have years and years and years of industry experience, and they're really there to kind of walk you through those really complex queries, understand what it is where your declarations are going wrong, or if there's something that's not quite working for you, and ensure that we get to a point where the system and process are smooth for you, and you can just be submitting supplementary declarations a lot easier. So that's what the TSS does do. A note on what TSS does not do. As I said, because we are completely free to use and we do serve the entire market of any traders moving goods between GB and Northern Ireland, that's essentially, we now have something like over 40,000 registered traders. So because of that, we can't really provide that sort of really bespoke service that a typical customs broker would do. So we do urge you, if you are a trader who's looking to have that slightly more hands-on support from from a sort of a shipper or a freight forwarder, and you want someone who's going to handle it all for you, please do reach out to freight forwarders or the intermediary market, as that's really what they're there for. And then a final note on, as TSS is really there to help you with your customs declaration, we can't raise the non-standard documentation. So if you need things like CITES permits, export health certificates, anything that sort of sits around that journey, we can't provide it, but we'll tell you exactly what it is that you need, why you need it, and where you'll need it in the journey. So here's a few sort of happy stats for you. As you can see, we've now moved over 1 million consignments since we went live at the beginning of the year. As you can see, we're starting to really close the gap on supplementary declarations, which is really great, because I'm sure, as a lot of you know, we had a bit of a backlog where there was a gap in releasing functionality. So it's really great to see kind of, the more difficult declarations starting to move through the process now. As you can see, our sort of service stats are doing really well. So 6 seconds on average to answer calls. We've had 100% availability. The system has never gone down. So, we really are trying to push that digital agenda. And one thing we do want to raise your attention to, if you haven't heard of it already, is our bulk upload API. If you're a type of trader who moves huge volumes of goods, and often the same types of goods, it's really worth reaching out so we can put you in touch with our bulk load API team, which essentially allows our technology interface just to talk to your businesses, and you can just push and pull the data without any of the manual sort of keying in that we do currently. And we've had traders move something like 20,000 declarations on a weekend just using the API interface. So we really do urge you to reach out and take a look at it if you haven't already. So let's have a recap on what does the process actually look like. So we normally talk about 3 types of declarations. You have your ENS, which is your entry summary, also known as the safety and security declaration. That essentially, it does what it says. It's the security declaration that is needed whenever you enter the EU security zone, which Northern Ireland forms part of. You then have your import declaration. So in the early days, TSS chose to prioritise the flow of goods into Northern Ireland on day 1. So we use our simplified journey. So we split the import declaration into 2 halves. You have the simplified frontier declaration and the supplementary declaration. So the simplified frontier, or the SFD, also does kind of what it says. It's a simplified data set, which we submit into the government system for you before the journey begins. And then you have the supplementary declaration, which is done once the goods move. And that's, as I'm sure you have sort of had a chance to kind of play around with now, it's sort of the more meatier part of the declaration. What are your tariff options? Are you claiming preference? And when the duty is applicable. You can now also submit a full frontier declaration, which is essentially doing the full import declaration in one go before the goods moved. So you would do that instead of the simplified frontier and the supplementary declaration. We do normally recommend that you stick to the simplified journey, simply because it is easier to use, gives you a bit more time to get used to the declaration, because if you do choose to do the FFD or the full frontier, you'd have to do everything up front, get it completely cleared, and pay any duties before the goods move. We generally say you only would really use an FFD if you were using a custom special procedure, which we'll come on to later in the procedure, as that's the only way we support those. So if, for example, if you're moving goods under inward processing in and out of a customs warehouse, or claiming return goods relief, you'd need to use the full frontier declaration to do that. So what does that journey look like in terms of a more visual flow? We always say step 1 is double check your shipping arrangements. Do you actually understand how your business works in terms of who is it that's actually responsible for raising the import declaration? That's really important, because in our typical model, we put most of the emphasis on the NI buyer, who will be the importer of record. So they will be the ones who's responsible for for raising the import declaration on the TSS and paying any import duties associated with the movement. If you move goods under an Incoterm known as delivered duty paid, DDP, or delivered at place, DAP, it might be your GB supplier who's responsible for it, as they will be the ones who interact with the TSS system, who will raise the import declaration and pay the duties. So it's really worth just double checking who it is that does what. So once you've kind of defined who is going to be the importer of record, your carrier or your haulier will typically log on to the TSS portal and they will raise the safety and security declaration. What this involves is normally a basic description of the goods, the EORI numbers or the business identification numbers of the supplier, the buyer. So essentially what the goods are, where they've come from, who they're going to, and then they'll also add on the vehicle information. And that's kind of why we normally put that onus on the haulier. If you did want to add on the goods detail yourself, there is a different model called consignment first, where you can log on, add in the goods detail, and then your haulier can separately log on and add the vehicle's details at a later date. So it really does just go down to whatever your business prefers. So at that point, the safety and security or the ENS declaration is lodged. TSS then submits that to the relevant government system known as ICS Northern Ireland. We then use that exact same data set to automatically complete the simplified frontier declaration. So the first half of that import declaration, TSS will do for you using the same data set. We will take the ENS data set, submit the simplified frontier declaration, and that will go into the custom system known as CDS, which is the custom system operating in Northern Ireland. If both of those declarations go through, both systems will return clearances known as movement reference numbers or MRNs. As ever, I'm going to apologise now for the huge amount of acronyms that are about to follow. But yeah, so your ENS and your SFD, so the security declaration, the customs declaration, they get submitted. If all goes well, you'll get movement references or MRNs back. We then provide that back to the haulier and the trader via the TSS portal. The next step is your haulier will then need to log on to another government system called GVMS or the Goods Vehicle Movement System, where they'll enter both of those MRNs. And if GVMS accepts it, it will validate that and it will provide a barcode known as a Goods Movement Reference Number. That barcode is really important because your haulier will need that when boarding the ferry at whichever port they are leaving to enter Northern Ireland, and the ferry operators will require that to say that this freight vehicle has done its compliance. You can then carry on your journey, the goods are delivered, and because we know that that GMR or that barcode has been scanned, that tells TSS that the goods have now moved, and we will send you an email to say, or whoever's the EORI number is, we will contact the trader or the importer of record to say, your goods have now moved, please can you log back onto the portal and complete your supplementary declaration. You have until the 5th working day of the following month to do that. So for example, if you move goods today, you'd have until the 4th or 5th working day of October to complete your declaration and pay any import duties if they're applicable. And if, for example, you did choose to do a full frontier declaration instead, as you can see, the journey is almost the same, just instead of the simplified frontier declaration, once your ENS has been completed, you as the importer of record need to log on and complete the full frontier declaration. You need to submit it, you need to pay any duties, and then your journey just continues and your import's done once the goods have been delivered. So on that note, I will pause for breath and hand over to Shankar.
Great, thanks, Shanoli. So if we can go to the next slide, I'm going to focus on the sub deck piece of this, but just very quickly, just a note on the simplified frontier declaration for controlled goods. And when we say controlled goods, particularly what we're talking about are the SPS controlled goods, which are the DEFRA controlled goods. These are controlled by control in the TSS context means other government departments. There is, of course, a very specific definition of customs controlled goods. We're talking about a broader category than that. So if you're moving what are DEFRA controlled SPS goods, such as live animals, food, meat, dairy, plant products, even ozone depleting gases, those are subject to the SFD for controlled goods. And we got on the slide there some links to user guides and the requirements. There are more requirements if you're moving SPS controlled goods on the SFD, that you need to put more into the SFD, including in particular the import commodity codes. So if we go to the next slide, please. Typically, when you are moving SPS goods GB to NI, it is the seller. Now, the TSS, as Shonali said, doesn't raise these declarations or these certificates for you. You have to do that yourselves. But typically, it is the seller who obtains the export health certificate that will be coming from DEFRA. The buyer, assuming we're talking about anything other than DDP Incoterms, it is the buyer who will be submitting the CHED, that's the Common Health Export Declaration form, which is part of the TRACES system. TRACES is the European Agricultural Database System. It is the CHED, it's the buyer who will be submitting the CHED entry into the TSS declaration, and that is then the import declaration. So we go to the next slide. I'm not proposing to go through the whole workflow for SPS goods. The only important thing to note if you are representing the buyer or the supplier is what they have to do. And so again, if you're representing the buyer, the importer, then it is the CHED that needs to be completed. You need to update, apologize for a bit of background noise here. You need to update the CHED with the export health certificate and the seal number. If you're representing the supplier, the exporter has to produce the export health certificate. They've got to get that from the government, from DEFRA itself. A lot of the rest of this goes on, under the radar. So you're looking at some TSS systems, other government systems, other government databases. You're looking at what the carrier has to do, and what the pool health and border agencies have to do. If we go to the next slide, please. So basically, in summary, for moving the SPS goods such as livestock, products of animal origin, or plants, you have to register on traces before your movement begins. We are still seeing people not registering on traces and not submitting CHED information occasionally. Over time, this will become more difficult to actually clear your goods through the frontier if you don't do the traces and the CHED information on your SPS, on your SFD properly. So far, that has not been a significant impediment to getting through the frontier. That will become an impediment over time. So it is important that you get this done correctly, and not be lulled into the full sense of security that you didn't have to do this before, and nothing seemed to impede your truck from getting through the frontier. That, as I say, will not be the case in the future. If you go to the next slide, please. So this is just an example of what it looks like on the form. If you look at the Northern Ireland online tariff tool, you'll be able to get the relevant control, the relevant certificate that you will need. That can then be input into the form at the relevant place on the TSS portal. The TSS portal is the ENS declaration. That is what populates the SFD. So that's what that looks like for controlled goods, which is different from what it looks like for standard goods. And if we go to the next slide, please. There is a video that demonstrates SFD for controlled goods on the Northern Ireland Customs Trade Academy website there. And just a quick plug for the NICTA website. There's a lot of information on that, so please consult with that. There's videos, demonstrations, all kinds of things, and links to our various guidance and other materials. If we now look at the supplementary declaration, I want to spend a bit more time on this, and this is just a quick recap of where it fits into the process. So, and I think Shonali went over most of this. What I would focus on in this slide is that there's a process when you have to submit your supplementary declaration. When you submit your supplementary declaration there on the right of that slide, that is when the duty becomes payable. And so you need to, before you actually submit the supplementary declaration, you need to figure out exactly what it is that you're going to do. What is your strategy for submission of the supplementary declaration so that you can ensure that you're paying the minimum tariff applicable? If we go to the next slide. So we have obviously we've got the supplementary declaration in process. It can be done through the portal, it can be done manually or via the API. And again, just to underscore the power of the API, if you are in that category where you've got the relevant IT systems that can talk to our IT systems in TSS, then it's certainly important to at least investigate with our API team whether it makes sense for you to use the API, because you can clear a significant volume of declarations that way very quickly. If we go to the next slide. So these are the timelines that you have to think about with respect to the SDI. The SDI has to be completed, that's the supplementary declaration, has to be completed before the 4th working day of the month following the month of the movement. And so what will happen is once you've done the SFD, TSS will then reach out to the importer of record and say, you now need to submit a supplementary declaration. And this is the information that you need in order to do it. If we go to the next slide. And I'll just say, parenthetically, I'll just re-emphasize that the import declaration consists not only of the SFD, but also the supplementary declaration. So you have not completed your import declaration until you've done the supplementary declaration. So this is not a case where this is an additional burden that's being imposed on you outside of the rules, outside of the UCC rules. And it's really important for your clients to understand that and to understand that what we've done at TSS is we've deliberately allowed all traders, and this is very unusual, we've allowed all traders to use our special authorization, which is our CFSP authorization, Customs Freight Simplified Procedures. We've allowed them to use our simplified procedures so that you can get easily across the frontier between GB and Northern Ireland on simply using the ENS, the Safety and Security Declaration, and the SFD. And then you can, with a bit more time, finish up the information that you need to plug in there for the supplementary declaration, so that you are not impeded in getting across the frontier. But this is, ordinarily, that would not be possible. That's something that we have specifically offered to traders to enable less pressure on the GBNI frontier. But you need to then do the supplementary declaration, otherwise you haven't done an import declaration properly. And there are all sorts of consequences, obviously, for not doing import declarations when they are required. So, however, having said that, what we are also very clear about is that where TSS functionality does not yet exist, and until recently we did not have functionality for example, special customs procedures. We do now under our release 6, but if TSS functionality doesn't exist for a particular process, then we'll just hold the supplementary declaration. The key thing here is to actually, in good faith, try to be completing your declarations. If there's some complication, if you've had problems or something, there's going to be flexibility here, clearly, from both us and HMRC. But we would ask, if you are having any kind of difficulty, to immediately raise a case, and our contact center agents will help you. We also have lots of outbound processes to try to make sure that you're being helped in doing the supplementary declaration. So if we go to the next slide, please. We've also launched, as part of the help to sort of assist people in doing supplementary declarations, the Supplementary Declaration Assistant, which is to help you clear your backlog of supplementary declarations. So this is particularly powerful. It's a particularly powerful tool if you are authorized on the UK Trader Scheme. The UK Trader Scheme, as I'll come to, is the scheme for not at-risk traders. In other words, these are traders who are trading goods between GB and Northern Ireland under the protocol, GB and Northern Ireland are in the same customs territory, legally the same customs territory, and therefore no tariff would ever have to be paid. If you're claiming the waiver, then the waiver, which is the state aid's authorized de minimis amount, then you're not paying a tariff either. Then the supplementary declaration assistant enables you to complete very easily your supplementary declaration. So what the assistant does is it groups goods in a given consignment to a single commodity code. It picks you under the UTC, you use the highest tariff, the commodity code. And that ordinarily, that obviously is a significant tariff implication for you, because if you're trading lots of goods that have lots of different tariffs, you're going to be paying the highest tariff for all of those goods. That obviously is a cash flow problem. But in the case of people on the UK trader scheme, or if you're claiming the waiver, then you're not paying a tariff anyway, so it doesn't matter. You can have all the benefits of the simplification here without any of the burden of the tariff. So if you qualify, have a look at the supplementary declaration assistant on there. There's nothing to prevent you bulking anyway, but you would have to do it at the highest commodity code, the highest tariff applicable to the commodity code in that consignment, and that may not be a sensible thing for you to do. But again, if you're on the UK trader scheme or you're claiming the waiver, this is by far the best way of doing quick supplementary declarations. If you go to the next slide. So you need to know what your tariff options are, and you need to know this before you do the supplementary declaration. So what we always say to traders is it's a little bit like doing an exam. You spend 20 minutes planning your essay, and you spend 40 minutes writing your essay. If you immediately start writing your essay, it's probably not going to be a very good essay. And similarly, if you immediately start filling in boxes on the supplementary declaration form without thinking through what your tariff options are, you're likely to get a bad result. So what should go into that planning process? You certainly need to think about these four sort of checks. The first, the sort of initial check would be, what is the European Common External Tariff for your product? And if the products have zero tariffs, now when I say the Common External Tariff, I mean what is the actual applied tariff rate on that product? So you may have a product that has a CET of 0, but it may be subject to an anti-dumping duty or a countervailing duty or some sort of trade remedy, which means a tariff is being applied. In that case, this won't be a not at risk good. Only if the applied tariff from the EU is 0 can this be a not at risk good. And if it's a not at risk good, you can easily, you don't need to go to any of the other checks. You can easily use the NIREM code in the supplementary declaration, and you can you will not have to pay a tariff. However, most products do not have a common external tariff rate of 0. So the next check that you would do is, can I be on the UK trader scheme? Is my good not at risk? And there's a whole series of checks that I'll go into in a second to figure that out with you. But this is by far the better way. So if you've got a straight choice between the UK trader scheme or looking at the trade agreement, the EU-UK TCA, to determine whether you can claim a preferential tariff rate, you are much better off under the UK trader scheme, because remember, the not at risk movement is a movement between GB and NI, remains in NI. That is a movement within the same customs territory, and therefore there's never a tariff, there's never an application of the trade agreement. It is the simplest, most straightforward way of not paying a tariff. And of course, we should say, obviously, as you know from the news, there is a current negotiation on the UK's command paper between the UK and the EU. We're in the very early stages of that. But it may well be that, certainly if you follow the logic of the command paper, that there would be additional simplifications from being on the UK trader scheme, and the ease of moving products will certainly be much greater for products that move within the UK customs territory than those that are at risk of moving outside it. So lots of reasons to register on the UK trader scheme. And I would also say that the temporary easement on permanent establishment, the requirement that you are permanently established in Northern Ireland, which particularly affects traders who are trading on DDA, delivered duty, DDP terms, delivered duty paid terms. Sorry about all these acronyms. But if you are on DDP terms, there is an easement on your requirement to have a permanent establishment. And as you will have read in the newspapers today and yesterday, I guess, all of the easements that currently play, all the grace periods have been indefinitely extended. So you won't need to prove that permanent establishment anytime soon. And certainly there would be notice if you had to do that. So again, another reason to make sure you're on the UK trader scheme. If you can't be on the UK trader scheme, then you move on to the third check, which is, can I claim a preference under the EU-UK TCA? And if I can, then certainly that's what you would be doing when you fill in the forms on the TSS. If you can't and you have to pay a duty because, for example, you don't satisfy the rules of origin, and we'll go into that in a second, then you can claim the waiver, which is the de minimis threshold. Now, for very small traders, we typically would say you may want to go straight to this because rather than having to go through elaborate, the analysis of the trade agreement or sign up to the UK trader scheme, if I'm trading very, very small amounts between GB and Northern Ireland, I may well fall within the de minimis threshold, in which case you're better off using this and signing up to the waiver. So if we go to the next slide. So how do you register for the UK trader scheme if you're on the second check there? If you can demonstrate, first of all, you've got to be able to demonstrate your goods are not at risk. You've got to have some kind of visibility over those GB NI movements. You've got to be able to know that they don't go, there's no risk that they will go to Ireland. You've got to be selling under the terms of the protocol. You've got to be selling to or providing for final use by end consumers located in Northern Ireland, or there for internal UK trade elsewhere in the UK. That's the part about the UK single customs territory. There was a provisional authorization until February of this year. Many of you may have already, or many of your clients may already have received their provisional authorization, and that will have been a full authorization would have then happened 4 months after that. We're now in a time period where if you apply to the UK trader scheme, you'll go through a proper authorization, but it shouldn't take more than a month. And we've got guidance on the gov.uk website there to show you how you can declare your goods not at risk. We go to the next slide. So what are the criteria that you need to meet? So first of all, as we said, this permanent establishment, your business established in Northern Ireland, there is a temporary easement on that. And that temporary easement, as of today, has been indefinitely extended. So you don't have to worry about being established in Northern Ireland. If you have indirect customs, if the process is taking place in GB, which it would be if you are on DDP terms, for example, and it's the supplier who has the obligation to do the customs declaration, then provided you're using an indirect customs representative in Northern Ireland, which could be your own agent under their authorizations, or it could be TSS, then you don't have to worry about this particular element. You do have to have no history of serious customs or tax infringements, and you will have to maintain records that support the not at risk criteria, i.e. sale to end consumers and some of the sort of visibility you have over those movements. If we go to the next slide. How do you demonstrate that goods are not at risk? Well, first of all, there's authorization under the trader scheme. You write to HMRC if you haven't got that authorization already, and you request that authorization. And TSS can help you with, with that process if you think you qualify and if you think you're in that category. You do need to maintain evidence of sale to consumers or business use in Northern Ireland or own use in Northern Ireland. And you can't do this, you can't use this if you have no evidence of goods not at risk. So this is not a check the box exercise, this is an actual assessment that is made by HMRC. You go to the next slide, please. So there is a rule under the protocol that if your goods are subject to processing in Northern Ireland, then they are deemed to be at risk. There are a couple of exceptions to that sort of exception, if you will. One is if you are a small processor, if you're under £500,000 in turnover a year, then you qualify for the small processor exception, and you can still be not at risk. And then there are these categories of food, sale of food to consumers in the UK. So if you're selling food into Northern Ireland and you're processing it in Northern Ireland, you can still be not at risk. Construction, direct provision of goods for health or care services by the importer, not-for-profit activities by the importer, and final use of animal feed on premises in Northern Ireland by the importer. All of those are, you can be a processor in all of those areas and you can still qualify for the UK trader scheme and the not at risk classification. If we go to the next slide, please. The HMRC has introduced a new sort of facilitation, I suppose, which is apportionment. It is important you understand this. You have to get HMRC's clearance to use apportionment, and ordinarily, if you are making an application under the UK trader scheme and you intend to use apportionment, you would include that in your application. But if you're already a member of the UK trader scheme, if you're already on there and you want to use apportionment for something that wasn't in the contemplation at the time, you need to get HMRC's approval for it. So what is apportionment? Apportionment allows you, essentially what it says is if you are trading some goods not at risk, you've got some goods in your consignments that are going GBNI and they're not going to Ireland, but there are some other goods that are going to Ireland, you're able to apportion that percentage that stays in Northern Ireland, so you don't lose the benefit of not at risk simply because you have some goods that are going to Ireland. However, in order to avail yourself of apportionment, you need to be able to demonstrate that you've got a pattern of, you've got a history of transactions where for typically 3 years or so, it doesn't really change. That percentage of what stays in Northern Ireland, what ends up in Ireland doesn't really change. So if it's, and it doesn't matter so much what the percentage is, what matters is that it doesn't really change. And typically what you typically use is, it doesn't have to be exactly the same every year, but within typically 10%. I mean, so if it's 70% staying in Northern Ireland 1 year and it's 73% or 75% the next year, that's not going to prevent from using apportionment. But if it changes more drastically than that, you won't be able to use it. It's all about risk. I mean, it's all about convincing the EU that there's no risk that these products that are intended for Northern Ireland will end up in Ireland. And so we go to the next slide, please. So in order to use apportionment, you've got to be authorized under the UK trader scheme. HMRC needs to know that you're going to use apportionment either in your initial application or subsequently. Stable supply chains, as we mentioned, and you need to be able to provide evidence that your declarations are accurate. So you need to be able to keep records. It's not sufficient just to sort of say, I've had this history, I'm going to use apportionment, and then not keep any record. You have to keep records of this if you intend to use it. We go to the next slide. So I'm going to cover the waiver now because, as I said before, if you're a very small trader, you may want to just go straight to this category. The waiver is the de minimis level of state aid that every person is allowed under EU law. It's 200,000 euros over 3 fiscal years, although there are lower allowances for certain other sectors, like fisheries, for example, and so on. If you're a very small business, or you have a very small amount of GBNI trade, the waiver might be the best path for you to go down. You'll need your EORI number, and you'll need to submit details on this form that we've linked there on the slide within 10 working days of making your declaration. And if we go to the next slide, we've got videos of how to do supplementary declarations, by the way, that link to on the NICTA website. And we'll make all of these slides, well known we'll share all these slides with you, or the Institute will share them with you after this. Now, we've got a couple of decision engines here. We call them decision engines because they're not exactly like decision trees. They are more an input of information and a sort of decision that comes out of them. So just to quickly walk you through these. First of all, you ask the question, you're about to do a supplementary declaration, you ask the question, are there procedures not supported by TSS? Because if there are, then you can absolutely hold the completion of the supplementary declaration until TSS functionality is available. If you are supported, then the question then becomes, what is the EU rate? Is it the common external tariff of 0 as amended from time to time by applicable trade remedies? Steel is an example of that. If that rate is non-zero, then you could be in a case where a tariff has to be paid, and you need to investigate these other options. If it's not 0, then you ask, is there a 0 duty preference under the trade agreement? If there is, you can then use the supplementary declaration assistant and complete your declaration. If there isn't, you look at the UK trader scheme, the not at risk category. Can you qualify for the not at risk category? If you can, use the supplementary declaration to complete your declaration in the way that I described. If you can't, for whatever reason, then we go on to the next slide. If you apply for the UK trader scheme, and based on what we said before, you may want to use the waiver instead. If you're a very small trader, NI8 is simply the code that you would enter into there. If you are using UKTS, you check the register, make sure you're registered, etc., etc. Can you use the supplementary declaration assistant? You use the supplementary declaration assistant, you bulk all your commodities, it makes the supplementary declaration much easier, and you're not paying a duty anyway. If you can't apply for the UKTS and the duty is non-zero and you can't use the preference, what else can you do? Can you use return goods relief? That's what RGR stands for there. For example, if you've got product coming in from the EU into GB, it's not being processed, it's going to Northern Ireland. Because it's not being processed, it's called a secondary movement. That means you have to pay a tariff, notwithstanding the trade agreement. If you're in that particular case, you can use RGR, return goods relief, to relieve you of paying the duty, but you have to have evidence of the movement from the EU into GB. Can you use other processes, other special customs procedures, such as inward processing IP, outward processing customs warehousing? There are lots of other processes, and essentially what you're trying to do there is avoid entering free circulation in GB. So if you've got product coming from the EU in the way that I just described, and it goes into a special process and doesn't go into free circulation in GB, and it then moves on to Northern Ireland, and it finishes its journey in Northern Ireland, you don't have that secondary movement problem because it hasn't moved into free circulation in GB. And so you can often use some of these processes to ensure you're not having to pay a tariff. Similarly, if you've got a product that is coming in that doesn't satisfy the rules of origin of the trade agreement, might be coming with China source materials or from elsewhere, if it enters free circulation in GB, you're going to have to pay that tariff that's applicable there, the UK tariff. And then it moves into Northern Ireland, you may end up having to pay the EU tariff again. So to avoid that double tariff issue, you would also use some of those special customs processes. Now, under our release 6, which went live a few weeks ago, you are able to, TSS does support those special customs procedures, but if you're going to do that, you need to use a full frontier declaration. So it's important that if that is the process you go through, which again emphasizes why it's important to go through this decision engine process early in your process. If you're going to use this, you're going to have to restructure how you do things. You're going to have to use the full frontier declaration for that. And then a duty may be payable if you're using those special procedures at a reduced rate. You can claim NI aid if you've got a waiver that you can use to lower that duty, and then you can use the Supplementary Declaration Assistant if you're using the waiver, because you're not going to end up paying the highest duty, the highest duty that applies to the particular commodity code that you're bulking to under the Supplementary Declaration Assistant. We've got some links in there that are helpful to understand some of this, but that's a version of a decision engine you might want to use based on the information you need in order to determine the best way of doing your declaration. So if we go to the next slide, please. So the key points: obviously read the guides, familiarize yourself with the guides early in the process. And again, if you are going to be in a situation where you actually need to use a special customs process and you've not done that, these take some time to set up. So this is not something you can immediately do. You're going to have to plan this. Because we have functionality for these things now. We're doing a series of presentations on these on September the 20th. And we have a lot of information that we're producing on special procedures. You need to determine, obviously, whether you're going to be declaring not at risk or at risk. It's a fundamental difference. And that's the difference between use the NIREM code if you're declaring goods at risk. If you're using NI aid, so use NI aid if you're going to be claiming a waiver. NI DOM and NI imp reflect what you would do. That's what you put on the header when you do the initial declaration. NI DOM is the standard route GB-NI free circulation. NI imp is if you are moving goods under special procedures. And the other information you need, we got a guide there and a link there to Controlled Goods and the online tariff tool. So if you've got controlled goods, you're going to be needing to put additional information in terms of licenses, controls, and tariffs under the EU. And this is the EU tariff if you're at risk, that would apply. So if we go to the next slide. So summary of those 4 checks: check the common external tariff as applied. Check whether you can satisfy that you can be covered under the UK trader scheme. If that doesn't apply, you've got the preferences of the rules of the EU-UK TCA to give you a 0 rate, but you've got to satisfy the rules of origin. And then there is the waiver, which if you're a small trader, you might want to use without having to go through any of these other processes. And if none of that applies, consider RGR. You need to know if you're using RGR because you need to use a full frontier declaration for that. And you need to have evidence of your EU to GB movement. So if you are going to be paying a tariff and you want to use RGR, you need to do that. You need to think about that very early in the process. And if not RGR, then potentially all of these other special customs procedures. Now, in terms of the special customs procedures, These are the main ones. You've got customs warehousing, which allows goods not in free circulation to be stored. You don't pay a customs duty, excise duty or import VAT. So it's a significant cash flow benefit in any event. Inward processing, if you've got processing going on, that allows for the payment of duties, import VAT and excise duties are suspended while the processing is taking place. So again, significant cash flow benefit there. Outward processing allows for the temporary export of goods for processing or repair and to re-import the processed products whilst retaining domestic status. So the combination of inward-outward processing, you tend to see quite a lot of this on the within, between NI and GB within that UK customs territory. Temporary admission allows goods to be imported temporarily for a 24-month period with total or partial relief from import duty. And authorized use, you can, in certain cases, have a reduced or a nil rate for goods imported from outside the UK, provided they're put to a particular authorized use within a specific period. That's part of what you have to show if you're going to use, for example, inward processing. If we go to the next slide. And I would say that we are doing, presentations on all of these things on the 20th of September in great detail. These are the processes that we support. Sorry, if we go, that went on. These are the processes that we support with the associated procedure codes through the full frontier declaration process. So you need to use a full frontier declaration if you're going to do any of these things. So the release to free circulation out of a special procedure, for example, you could have a warehouse in Northern Ireland and you're releasing to free circulation in Northern Ireland. And that's the majority of goods follow those particular codes. Re-importation of goods to Northern Ireland which were previously exported or sent to GB, and that's you can claim return goods relief there for those particular codes. And temporary admission when moving goods into Northern Ireland for short periods. Again, we've listed the codes that applies to. Onward supply relief is quite an important relief. That is for goods that are moved into Northern Ireland, which will then be supplied to the EU, and it allows you to have a better sort of cash flow situation with regard to your VAT payments and so on. And that's that supports those codes listed there. And we've got guidance linked in the slides here on all of this. If you've got specific goods like military equipment that are intended for certain authorized uses, then you can claim a nil duty or reduced duty, and the codes that supports are listed there. We go to the next slide. Inward processing, I mentioned, where you've got goods that are being processed or repaired before re-export, movement out of a customs warehouse, movement out of an excise warehouse. We support all of those now. These the asterisk procedure codes, there's a series of codes there that were asterisked. These are the ones that can be declared with pre-lodged FFDs in advance of movement, or full frontier declarations submitted once the goods are in location, i.e. they are arrived. So that gives you a little an extra layer of functionality there. If we go to the next slide. Otherwise, you'll need an arrived FFD for all those other non-asterisk goods. So return goods relief is a form of customs relief. It means you don't pay the duty. It's been live since 4th of July, or at least our support for it has been live since the 4th of July. And that removes the need to pay duty on goods that are being re-imported into the UK. They have to be in free circulation in the UK when they were exported. So this would not apply to any of the special processes I just went over. The time limit is within 3 years of their export, and it's claimed during the import process. And goods that are eligible would be goods exported from the UK as free circulation, goods exported from the UK following inward processing, and goods declared for outward processing that are unprocessed and in the same state of the original export. If we go to the next slide. And so the use cases, I mean, clearly 1A is the more sort of standard use of return goods relief, which is goods that are being returned. So I literally, as the name suggests, I'm claiming the duty relief because I'm returning goods. And traders who are likely to do this are traders that transfer parts or finished goods between sites, traders who receive customer returns, lots of retailers, for example. The other area of return goods relief that could be used much, much more significantly is where you've lost the preference treatment on the export from the EU. So product comes from EU into GB, enters free circulation in GB, goes on to Northern Ireland without processing. As I said before, that is a secondary movement that would ordinarily attract a tariff because you lose origin, and therefore you lose the preference. So if you're not on the UK trader scheme, could be for any reason, those goods don't, and the goods don't qualify for preferential tariff because, for example, you don't satisfy rules of origin, you can use return goods relief here to not have to pay that duty. We go to the next slide, please. So we will be submitting, I mean, there will be guidance on gov.uk on RGR shortly. That will be upgraded to reflect the Northern Ireland situation. But the key things that you need to think about here are, what is my evidence of the original import? If it's from the EU, for example, you're using RGR that way, EU to GB. Evidence about the country of origin, and the view of the RGR route. I mean, you need to know where it's going. You know, you need to, at the product level, you need to be able to track that it goes from EU to GB to Northern Ireland. And we've got links there to HMRC guidance. In terms of what's coming new, what's coming, we delivered release 6 in August, end of August. So that's all the alternate customs procedures we talked about. We also have delivered air inventory linked process. So this is particularly rest of world into Northern Ireland arriving at Belfast, International Airport, for example. That is mostly done by agents and intermediaries of those traders. So we've had a series of sessions with the top 30 of those, which I think they account for about 90% of the trade. And we've explained our process that supports them. If, for example, they don't have to use TSS, they can use their own CDS linkage there to do that. But if they don't have it up and running, they can certainly use TSS and our CDS link there, and we've explained the process to them. If this applies to you or your clients, you get in touch with us, because while we have talked pretty extensively to the top 90% of trade, there are other people who obviously need this explained to them. The API catch-up, which is always, the API always follows the portal. The functionality is released on the portal first, and then it is caught up. The API catches up with it. And then security deposits and cash accounts. The release 7, these are candidates. This is scheduled for early October. Maritime ILP, so the same rest of world to Northern Ireland that arrives at Belfast Harbour. We've got new functionality, and this may be of great interest for agents and intermediaries, so that it makes it a lot easier for you to represent your client on TSS. Right now, people do represent clients on TSS, but all the communications go to the trader, so you have to sort of get your arms around all those communications. And I think what a lot of traders and agents would rather have is their own accounts on TSS, so that the agent can handle everything and the trader doesn't need to be disturbed. And then we've got various data enrichment and declaration simplifications. Email rationalization is one of the service enhancements, because obviously we're very conscious at TSS that we send you a lot of email, and rationalizing that so you get less, so you only get the ones you need to see, is a service enhancement that will be going on there. And if we go to the next slide. I've mentioned late August, what's happened. Early October, we got the new process. And then what you do need to bear in mind, and this is obviously very important for those rest of world to Northern Ireland movements which were on Chief or are on Chief, the migration to CDS from Chief has been kicked out to the 31st of October. But you still need to get ready, and there's still things you need to do. So even though it's been kicked out to the 31st of October, our advice to people who will need to migrate is start planning this now. Don't wait until the end of October and then be faced with a huge cliff edge and a huge problem. Go to the next slide, please. Again, lots of information on the Northern Ireland Customs and Trade Academy website, user guides. As I say, we will have a session on September the 20th on all of the special procedures, special customs processes that we are now supporting. So look forward to interacting with you all on that in that format. And if we go to the next slide, I think that is the presentation. We've got some time for Q&A, and I know that my colleagues on TSS have been busily answering questions in the background, so hopefully we picked up most of those. And if there are things that we haven't picked up, then happy to go to questions now.
Thank you, Shankar. Thank you, Shonali. That was a huge amount of information in a short period of time. So appreciate that. And as we said, the slides will be circulated because I know there's a lot of useful links in there. I know there's a number of Q&A questions that have come in. I'm not sure if everyone has seen the answers to some of those, so I might just pick a couple and go through them if you don't mind. I know Mike does both work in the background, so I might just pick a couple of them, and if anyone has any other questions, they can feed them in. The first question is, can the Trader Support Service link to HMRC for deferment accounts?
Yeah, I think Magda has put in the Q&A there a series of links to how people would basically deal with this. There is a registration for CDS access. There's a CDS dashboard that enables you to, once you're on that dashboard, enables you to get the appropriate accounts, and the links to the DDAs. I would say on this, we have been allowing people to use the TSS DDA for some time, but there is a transition away from that. It is important that traders get their own DDA accounts where they can, because it enables you to take advantage of the actual deferment, much better. Because we are doing this for everybody, we're not able to give you, the full benefit of deferment on TSS. So that's why it's important to have your own, DDA account where you can do that.
Okay, great. Yeah, because I know just functionality on Zoom, if someone has asked a question that's been answered, other attendees can't see the questions or answers. So that's why I'm kind of going through them again. So it probably seems like we're duplicating.
So I think I think it's useful then when you share the slides to also share the I suppose you have to pick this up before we close the call, but to share the links as well.
Yeah, no, that would be good. We might be able to have them on the slides maybe. There was another question just in relation to receiving a DBM or a barcode. So how long does it take to provide clearance to move goods after submitting the SFD? and how long does it then take to receive a GBMR barcode?
So the MRN, I think that's what that's referring to. So the way the process works is the first thing you do is you do the ENS, the Safety and Security Declaration, which is the responsibility of the carrier. So typically your haulier would be doing that. That automatically populates the Simplified Frontier Declaration. It's the SFD that enables you to get an MRN for the product. And as long as, so if you imagine the haulier moving across with a series of consignments, and every one of them has an SFD attached to it, and a series of MRNs attached to it, that through the UK's Goods Vehicle Movement Service, GVMS, creates the GMR, the Goods Movement Reference Number. It is the GMR that the haulier needs in order to get through the port, to get through the terminal. And so once, this is why it's quite important that we are getting the SFDs right. This becomes a bigger issue with controlled goods SFDs, because there you need more information. You need the import commodity codes and so on. If you don't, there is a danger once all the systems are up and running. There is a danger to traders that one incomplete SFD could lead to no MRN for that particular consignment. And that could then prevent the entire load from getting the GMR. And without the GMR, that's when you will have the truck stopped at port kind of situation. Now we haven't had a lot of that, contrary to what people feared, and that's partly because of the system that we've adopted. But it's really important that if you are trading SPS controlled goods, which is where I think most of the problems are going to occur, that you do the things that you're supposed to do in terms of the import commodity code, in terms of the CHED, uploading the CHED information and all of that, because that will ultimately become necessary in order to secure that GMR. And you don't want your goods blocked at the border, and you certainly don't want to be responsible for other people's goods being blocked at the border. And everyone needs to sort of work together on making sure this is sort of compliantly done.
Great. There's another question in about just notifying HMRC really regarding the intention to use apportionment. Now I know this question might have come before. I know you did cover this in the slides. So for a trader that's already registered under the UK Trader Scheme, how is that done? Is there a specific email address that traders should email to notify HMRC that they are intending to use apportionment?
So HMRC has a UK Trader Scheme part of HMRC that is processing all of these applications. When you do your application to the UK Trader Scheme, you would include your intent, if indeed that's the case, to use apportionment in that application. If you haven't, if you've already got on the UK Trader Scheme and you're now intending to use apportionment, or I mean, this would be the only example where you'd have to separately ask, you consult with HMRC. But I mean, to be honest, I mean, if you're already on the UK Trader Scheme, you're probably on it because your goods are all not at risk, and that's probably the reason you are on it. So I can't imagine this would be the case for many people. I think most people, it's going to be, oh, I couldn't get on the UK Trader Scheme because some of my goods go to Ireland. Now I've discovered that there's apportionment, so I can actually get on the UK Trader Scheme in respect to the goods that go GBNI. Now I want to make an application. So what we encourage traders to do in that case is get in touch with us. We can help guide you through that UK Trader Scheme application. And in your application, you will also say, and I intend to use apportionment, and this is how, and this is my history of trade in the past 3 or 5 years, GBNI going on to Ireland in the way that we outlined.
Okay. Great. Okay, so that's great. So the email address just is uktraderscheme@hmrc.gov.uk.
Yeah.
Great. That's brilliant. One question I think a lot of people are probably wondering. You mentioned at the start that the Trader Support Service is not only is here for 2 years. is there a possibility that it will be extended after these 2 years?
No, it is possible that it will be extended. That is written into the process. I can't obviously give you any kind of sort of guarantee or anything about that. But what I will say, and I think people can sort of do with this what they will, but obviously we're not in steady state yet, and we still have further releases that TSS is launching, and of course we also have a live negotiation between the UK and the EU, and there is a new command paper out from the UK government that substantially changes a lot of these processes particularly for the not at risk category. So until we reach steady state, it's quite hard to say, well, now we're going to take the service away, I would imagine. And certainly, I think it's fair to say that if parties, if particularly small businesses, are not supported, then there would be quite strong resistance, I think, to taking TSS away from small traders. But I think we're in a sort of holding pattern right now because of the Northern Ireland command paper and the negotiations, and part of that holding pattern, just to make it very clear, because I don't think this was in the slides because it's too new, part of that holding pattern is essentially business as usual. In other words, all the easements, all the grace periods, just assume business as usual for the foreseeable future, and if that changes, there would be notice.
So that makes sense. I suppose we are just a kind of a wait and see approach. And I know somebody has asked whether there's a good summary of the impact of the UK action yesterday. I think probably the answer is no. I mean, it's any grace period that's been
what I'd say about that is don't think and we've occasionally we've got two responses when the command paper came out that were equally wrong. One was, oh, this means I don't have to do anything anymore. No, it's business as usual. In other words, it's exactly whatever you were doing before, you're going to carry on doing. There's no change to that. And of course, with the clear announcement now that indefinite extension of the grace periods, that's sort of even more underscored. Equally wrong is the oh, I just read that the European Union has rejected the command paper, and therefore, I need to plan for the end of the easements, I need to plan for the end of the grace periods, etc. That's equally not correct. So the most important takeaway right now is it's business as usual. Whatever you were doing before, you carry on doing in the future.
Oh, that's good advice. We just have to wait and see, I guess. And one more technical question, which I think is the last question. I don't see any other ones coming in. And I know we're coming up against the time, but it's a question. If you're registered under the UK Trader Scheme and you send parts from a site in Great Britain to the company site in Northern Ireland, can this movement still be done using SFD on TSS, or do you have to use a full declaration?
So if you're, they're two separate issues actually. So if you're the UK Trader Scheme, your movement is not at risk. So when you say moving from one site to another site, if those are just company sites, we're not talking about a special customs process. We're not talking about a customs warehouse or an excise warehouse or anything like that. Then you just use the UK Trader Scheme. You declare it not at risk using NIRM. These are free circulation movements. You don't pay a tariff. If what the question is really getting at is I'm just in the UK customs territory, GBNI. It's not going anywhere else. But I'm, for whatever reason, and it might be to do with rules of origin, it might be to do with other movements in the product, might be coming from Europe, and it may be going on to the rest of it would be, in this case, it would be ending up in Northern Ireland, but maybe coming from Europe. But I'm using a customs process, and the sites you're talking about are special customs processes, like warehouses or those sorts of things, customs warehouses. Then you would need to use a full frontier declaration if you are going to move things between special customs procedures. But I would question if you're using the UK trader scheme, it's because you've got a not at risk movement. Your movement's going GBNI, it's staying within the customs territory. I would question why you would need any kind of special customs process, because in that case, even if you've got the stuff coming from Europe entering GB, if it entered in free circulation and stayed in Northern Ireland, you're not going to be paying a tariff under any circumstances. So there's no need to think about secondary movements. There's no need to think about the UK-EU trade agreement. There's no need to think about it. This is, from a tariff perspective, but only a tariff perspective, this is like moving goods from London to Manchester. So you don't need to think about, and you wouldn't have a special customs procedure for that. So generally, so I would not worry about that. But those are two separate issues. So the real question is why, if in fact the question is about customs procedures, the real question is why would you even think about that? What is causing you to try to do that? Or why have you done that in the past?
Okay, no, that's very helpful. Thank you. Well, I think that's all the questions. I know we've got a few minutes, so I don't think anyone will complain if they get a little bit of a lunch break. But look, I just want to thank Shankar and Shonali. That was really useful, and appreciate you giving up your time to talk to us. We do, as we've said already, the recording will be made available as will the slides. And just want to say thanks to everyone for attending, and have a lovely afternoon.
Great, thanks very much.
Take care, everyone.